I think we should be live now.
Yeah. Good evening, everyone. Welcome to this special uh, lecture or a series of lectures on technical analysis by in conjunction with Catalyst Wealth. I am Dr. Ankit Desai. You all know me as a pediatric anesthetist. What you don't know is I am also a technical analyst, and I have been trained by these very people. So I thought it will be very useful for everyone to have the people who have trained me to have them with us and guide us as to how we should start investing in equities. So we have with us Mr. Prashant Sawant, who is one of the co-founders of Catalyst Wealth. Now, Catalyst Wealth is a platform or a company that they formed in 2017, in which they not only trade, but they also train a lot of people. I think Prashant and Rahul, they both have trained more than 500 people now. 500, Prashant? Yeah?
Yeah.
Yeah. So they have trained more than 500 people in technical analysis. So the goal is to become financially independent. Now, talking about Prashant, Prashant is a very good friend. He is an engineer by background, mechanical engineer, who was working in an investment bank and was left everything now and doing full-time technical analysis. He's also a SEBI registered technical analyst now. So congrats to Prashant for that. You are now a SEBI registered analyst. We also have with us Rahul Wani. Rahul, can you on your video? So we also have with us Rahul Wani, who is also the co-founder of Catalyst Wealth. Now Rahul is a chemical engineer by background. Had a very high-profile job in a big chemical company, a corporate chemical company. And as like Prashant, he has also left his job and now doing full-time technical analysis and training a lot of people in technical analysis. So, from our perspective as anesthesiologist, investment in equities or having a second source of income is very, very important. It is not only important, we all know how much we earn through our profession, which is not a bad thing actually, but we do need a second source of income. And for that, we are very haphazard, or our the way we invest is very, very haphazard. So there has to be a way in which we invest. So normally what people talk about is fundamental analysis, but what I have found is we don't have the adequate knowledge to be a fundamental analyst. So technical analysis works in a much better way. As in, we are not trained to be a fundamental analyst. So today, the goal of the first session, this is a three-part series, as I told you. The first session is about power of equities and introducing us to the technical analysis world. So Prashant, can we start the lecture, and can you just guide us as to what is the difference between technical analysis and fundamental analysis? What is the power of equities? What kind of returns you can generate in equities? And also guide us through the difference between investment in equities and something about mutual funds, how it is different from investing directly, how investing directly in equities is different from investing in mutual funds. So you can take over, Prashant, now.
Sure, sure. So thanks a lot, Ankit, and thanks for the forum. And first of all, thanks to everyone who is watching live and spending time on this evening. So I'll ensure that your time is made fruitful for sure by giving you insights which you might not have heard about and taking you far deeper into what we look at the stock market. Now, before we start, just a few things that we always invest in the stock market. Now, either it is direct through equity, we do it by, say, buying an HDFC bank, buying a Reliance, or we do it through SIPs. SIPs, as in you start investing in mutual funds. But either way, we are always invested in the stock market. If not directly, even while we are working with someone, our PF or part of our PPF, it's in the stock market. So always and always, we have a part of our hard-earned money which is invested in the stock market. Now, let us start with what I have. This is always the first slide of any presentation I start. So if you look at it, it is nothing but a dollar bill which is folded into a bear and a bull. This is stock market summarized in one slide. What it means is that stock market is nothing but a place where you have a bull and a bear. Now, what is a bull? A bull is someone who is having a view that the price of that particular thing will go up. At the same time, the bear is someone who's of the view that the price of that particular thing will go down. Now, my simple question or a thought which should come to everyone when you start with this is, when people say it's a bull run, okay, any market, forget about the stock market, any market you talk about, whether it's vegetables, fruits, clothing, chemical, anything in the world, it's always demand and supply. What happens is, if I ask you a simple question, you might have heard and spoken about this multiple times. There is a strong bull run going on, or there's a strong bear market. Now, my question is, or the thought which I had was that for a trade to happen, say for example, I go to a market and I want to buy some fruits. Now, that guy is selling because he feels this is the right price to sell. I am buying because I want it, there is a demand, and I feel it's the right price to buy. Now, I see that that's when a trade happens. For a trade to happen, there has to be a buyer and a seller. So if there is one buyer and one seller, it's equal. So why there's a bull market or bear market? In a bull market also there is one buyer, one seller. In the bear market also there is one buyer, one seller. So the main thing why there is a bull and bear market is the emotion. What happens is, in a bull market, the bulls, that is the ones who are having a view that the price will go up, are willing to buy at any high price. So whatever price the sellers are available, the bulls will absorb them, they'll buy it and they'll take the price further up. So that's why the whole emotion is strong buying, and that's why it's called as a bull market. At the same time, what happens is, in a bear market, the entire emotion is strongly bearish, which means the sellers are of a view that from here the price must crash and there's a lot of supply available here. So at any low price available, they are willing to sell. Normally, what would happen is one would sell at a high price. But in a bear market, the bears are willing to sell even at a low price. That is because of those emotions and the strong action. You get a bull market or a bear market. So that is the main thing. Before we start, I wanted to clarify that so that we all are aware about what's a bull market, what's a bear market. Now, let us start about what happened this year. So this is what we saw everywhere, any single business, anything, everything, it went for a shutdown. There was only one business which did not shut down even for 1 hour, and that was the stock markets across the world, whether it was the US, UK, India, anywhere in the world. The stock markets were not halted even for an hour. That showed the importance of the business. That showed that even if there was this severe pandemic, people, that the governments, the global organizations ensured that this one business never went down. So if that is so important, we need to definitely have some knowledge which will ensure that we not only are able to make money by investing directly, but at least we are aware about what's happening to the hard-earned money that we have earned and how it's getting invested. Is it into safe hands or it's not into safe hands? So let us start with this. Now, people always ask me, what's the difference between investing in gold or FD or equity? How does it differ? Now, if you look at this simple slide, this is enough to summarize what is the difference. So let us just check that what happened in the last 37 years. This is with regards to India. So FD would have given you 20 times returns. Your silver would have given 24 times, gold around 37 times, but equity would have given 260 times return. This is with regards to the indices, and this is as of 2019 September, last year's data. So this is the power that equities have. You might have seen so many crashes, whether it was the Harshad Mehta scam of 92, or IT bubble of 2000, or the 2006 2008 Lehman Brothers crash and the mortgage issue in US, or the 2016 China slowdown. All these issues, in spite of the crashes, the stock markets have only gone to new highs, and they have moved crazily. Now that's because of the amount of money pumped in, as well as the belief about the this price being the right price to buy by the bulls, and that is how we have seen growth. At the same time, you might have seen that when we try to invest as individuals, we try to say, the world is saying Reliance is going up, but when we try to buy, it starts going down. The world says Tata Motors is going up. We try to buy, it goes down. So we need to know what's happening. Typically, how we start is we go to that moneycontrol.com, or we go to some forums, or we go to some tips shared, or we read news and we try to buy. The main mistakes I have done when I started somewhere in 2002-3 were I used to look at when the companies have results and I used to feel that that's the day to trade. Then I realized that there is much beyond that. And what will start as a part of this series is today in the first one, we'll just go basic, but not basic. That basic would already give you stronger insights. At the end of the program, I'll give you something very good from my end as a token of gratitude for the forum. So that's at the end of the program. And next series, when we meet, that's the next Tuesday, we'll talk about advanced concepts based on what I'll give you at the end. And in the third one, we'll take it next level. Okay. My promise is by 3 sessions, you will be in a position to look at your own investments. You'll be able to find new stocks, mid caps, small caps, frontliners, doesn't matter. You'll be able to form a view on index. You'll be able to exit. At the same time, you'll also be able to look at what your mutual funds are doing. Now, Ankit asked me to talk about mutual funds. I'll come back to that topic once we go a little ahead in that. Is that fine, Ankit?
Yes, Prashant.
Yeah. So now let us start with something which is very basic. What are shares and why to invest? Okay. So just to summarize, if I have a cake with me and I want to give it to 10 people, I always divide it and I give equal share to everyone. Now, what happens is when there are corporates and companies who want to grow, they have two avenues. One is to take loans from the bank and to grow, or the second one is to sell a part of their stake to people who believe in their business and take money from them and grow. So that's where they give shares of their company, they share the uh, stake of their company to the people, to the now those people can be us, those people can be the FIs, those people can be the mutual funds. But that's how the companies give their shares. And now, based on my view or based on the emotion for those companies, their business, their growth, or any negative view on that, the price of shares would move because of what we discussed about the bull view and the bear view. That's the basic of a stock market. Now, why should we invest? So, if we want to be a part of a business, we have to invest in that so that we get a part of their returns and we grow as their shareholders. Now, there's something which I always talk about. What is the difference between being rich and being wealthy? So, if you want to be rich, your job, your work, your business can make you rich with all the money it rewards to you. But you can be wealthy in the real sense when the money that you earn is able to multiply, it's able to generate a strong passive source, or it's able to go multifold on its own, even without you working for that. That's where you go from rich to wealthy. So for that, according to my experience, the one instrument which has really helped over the last maybe 4 decades or more was equity. And let us see how. So that's the main reason why we invest. The other reason is also the dividends which the company pays. What are dividends? It's when a company makes profit at their own discretion, they share a part of their profit with their shareholders as dividend. But if you look at it now, compared to the share price, the dividends are very small. So the main reason to invest is the appreciation in the price, which means if I'm buying a Reliance at 1000, I would want it to go to 1200, 1300, where my money grows by 20-30%. That's the main view. So now let us talk about what is a market. Basic. Forget about stock market, any market. So market is nothing but, as we said, bull versus bear. That's buyer and seller. Two opposite views, they come together, a trade happens, and that's how a market works. Basic of any market, commodity, currency, everything. Now, the one question which I always think about is, suppose the market opens, and if I ask someone, when does the market open? Okay. So all those who can comment on Facebook, you can comment when does the market open. Okay. According to me, everyone will say that the market opens at 9:15. Okay. Now, when does the market close? So the market closes at 3:30, right? I am saying no. Why? Because if suppose today Infosys at 3:30 is closing at say 1200 rupees. So tomorrow at 9:15 it has to open at 1200. Does it happen? It never happens. Sometimes it may, but 99% of the time it never happens. It might be 1201, it might be 1199, but 1200 dot rarely. So what's happening from that 3:30 close to 9:15 open? It is there is some view which is formed on that market, on that particular stock, on that script. There are some minds working globally, and as soon as the exchange opens on the next day at 9:15, they take action and the price moves. So it's not the market which is opening at 9:15 and closing at 3:30. It is the exchange which opens at 9:15 and closes at 3:30. The market works 24/7, and the market is in the mind. I'll show you a beautiful example for that. Secondly, there are people who say that market will go here, market will go there. That's absolutely wrong way to talk about, because what you're trying to do is you're trying to build a rigid view, and you're trying to command to the market that it has to go there. What happens there is typically our investments falter and we are not able to exit because of our rigid view. So we should always know that the market is not certain, but it's probable. At the same time, we'll see with technicals how we are able to align ourselves very closely to that probability. And last thing is, the market is always right, we are wrong. Market cannot be wrong, because you'll hear that a lot of the times people saying the market did not work this way, the market did bad. The market does what it has done for years and decades and centuries. We have to align yourself with the right knowledge to how we can get maximum from those market moves. Now, so these are the two ways we spoke about, dividends and capital growth. Now, we need to understand that money is not created or printed in the stock market. It only exchanges hands. Now, I'll give you a beautiful example or ask you a question. Typically, what happens is, this is a thought I had when I put in effort into learning this initially. What happens is, suppose I have a, say, 50 rupees note in my wallet, and I just get out of my car in the basement parking. I open my wallet and I go up to the 12th floor in the lift. After reaching the 12th floor, suppose I realize that my 50 rupee note fell down in the parking lobby. I come out and I see that the electricity has gone down. I have to go down all the way. The lift, for some reason, is not working at all. I'll still go down to the parking lobby for my 50 rupee note, irrespective of whether I have 10 crores, 5 crores, or 10 lakhs with me. Does not matter. I'll go down for those 50 rupees. Why? Because I have value for that money, because I see it. But what you see in investments and currencies or stock market is, people do not care about the losses. They are not willing to learn. They are okay to see their money going down. They are okay to see people losing their money from them, just because they are not having that energy to learn now. But what I have seen is, if you are able to learn and able to master this skill, within 6 to 7 months, you are able to hit the right notes. You are able to build a very strong second source of income. I've seen that with at least 70 to 75% of the people who have learned from me. Now, what happens is, with the rest 25, it's about the effort we put in, right? Not everyone puts in the same effort. So once you learn, there has to be an effort for understanding what has been taught and to apply it finally. Now, what we have to do is, we have to look at why technicals work and what would be a difference between fundamentals and technical to start with. So let us look at this beautiful example. So there was a crop in the US. This is a story of early 19th century, and the crop was soybean. So to understand it more from a perspective of India, let's consider that soybean was growing in Maharashtra. Now what happened was, so Maharashtra is the west coast. Now what happened was, at that point of time, there was summer in Maharashtra, absolutely fine, the best weather for soybean. And the other thing was, in the entire India, soybean was in demand, there was scarcity. So ideally, as per the fundamentals, the price of soybean should have gone up, because if there is demand, the price has to go up. Now what happened was, that night it started running heavily in Kolkata in the month of, say, December. Now December was not the month for rains, and it started running very heavily in Kolkata. Next morning, the price of soybean crashed. Now the thought which must occur to you is, soybean was cultivated in Maharashtra. There was no rain, good sunshine, demand for the crop. It rained in Kolkata. Why would the price go down? Now let me tell you what happened. That the big money, the FIIs or the DIIs, the big people who are able to move the price of soybean were in Kolkata. At night, when all those eyes, the market was working, the exchange was closed, all those eyes saw that it's raining. They made a common view, oh my God, rain is not good for soybean. Now the price will go down, let's sell. And because of that selling, the price crashed. So fundamentally, it should have gone up. But what actually happened was, it crashed. Now, why it crashed? It's because of the view. Now, if one is able to understand that view, you'll be able to align to that view, and you will be able to invest in the right direction of the market. So let's see what exactly is that now, and how technicals and fundamentals differ. So technical analysis was introduced in Japan. Most of the patterns that you see, which we'll talk about as we go ahead, candlesticks and all, they are called as Japanese patterns. At the same time, there are other patterns which were developed on the Western side. So East and West, and that's how the technical analysis came into picture. So mainly it involves study of the price. Now, why price? We saw that example that the price started crashing. Now, if I were a fundamental investor, on all those crashes, I would have bought. But if I know what's happening from a technical perspective, and I know that the price is actually crashing all important levels, I would have exited my position. So that's the difference between an approach to fundamentals and technicals. Now let us see in depth what is that. So if you understand, for the example, based on the example that we just discussed on the soybean crop, you'll realize that fundamentals is the cause, right? For example, fundamentals might be just the price going down, or the view that it's raining, and as of now the rains are not good. But what was the effect? The price crashing. So if you are able to catch that effect, which technical analysis focuses on the price, you will be easily able to align your investments, your trades, to the right side of the market, and not in get trapped with the wrong moves. First thing. Secondly, in fundamentals you talk about value, but in technicals you talk about price. Now what's the difference? So let me ask you, somewhere around 2016, I was quite heavily invested in Tata Motors. A lot of people were, and the price was somewhere in the region of 580, 590, 600 also. At that time they were only having variants like Nano, some other Indigos, and they had the Land Rover deal, but Range Rover deal. But in spite of that, the price was there. Now if you look at it, last year they had variants like the new one which has come, and a lot of good SUVs coming out from Tata Motors. In spite of that, the price was 140. So if I look at it from a fundamental perspective, even before pandemic, price should have been about 600. But something happened to it, right? There was a view on the price. Now, how that view was caught? It's caught by technical analysis, which will tell me it's not the right time to be invested in Tata Motors. It's time to book profits. Even that one bit of knowledge can help me save lakhs of rupees if I'm heavily invested into that. Now, second thing, if you go to technicals, we'll have to look at the financial statements. Now let me talk. Now what happens is, typically we love to read them because it feels that we are gaining some knowledge. Now, but are we able to use it in the market? Will I be able to read a statement and invest at the right time, exit at the right time? I have never seen it. At the same time, let me talk about, if I want to know about the fundamentals of a company, I need to know a few factors. One is, obviously, for any business, I need to know what's happening to the USD, what's happening to crude, what about the peers in that same segment of business, and additionally, what is the profit margin, who are the stakeholders, what's the management doing, what is the shareholding pattern of that company, are the FIs invested in that, what's the PE ratios, all those ratios, what's the earning per share, all those things. Additionally, I also need to know the government policies with regards to that product. I need to know what's happening globally with regards to that product. Since we are from medical field, I can go way back to somewhere around 2005 6, and you might have known that the price of paracetamol, which was an API widely used, even now it's used in India, manufactured, was somewhere around 130, 140 at that point of time. What happened was, China started pumping in material at 58 and 60 rupees. Now, entire manufacturing setup, imagine having that setup, having those labor, all that thing went for a toss to meet that price. And that's how, if we are not aware about what's happening globally about that product, we will not be able to take action about that business in the right way. But to understand what's the company doing with regards to the price, you only need to look at that chart. We need not even know what the company is into. I'll show you a few examples. All we need to know is what is the price doing now, right? So now there's a beautiful saying in Gujarati which says that bhav bhagwan che. What it means is, price is divine. So we just need to look at the price, and if we understand the price, we'll be able to invest easily. So let's make it more interesting and go deeper into this. I hope all are finding it good, valuable. So now what happens is, from a fundamental perspective, I will never be able to time my investment. For example, the fundamentals, all the factors we spoke about, government policy, USD, INR, all those, management, they don't change every hour, every day, or every month. But the price is not only changing every day, it's not changing every hour or every minute, it's changing tick by tick. What's tick by tick? It's say for every second, the price is changing. Now, if it is changing, that means the view is changing, something is changing, there is emotional turbulence between the buyers and sellers. We just need to catch that, right? Now, investing, trading, both can be done with technicals, either from a long-term perspective, short-term perspective, even as quick as an intraday can be done. Anything can be done with technicals because it allows you to do something called as risk management, and it also allows you to time your investment, which means you'll be able to see if the system is telling you to exit, you'll be able to exit with a profit or with a small loss and re-enter when the price tells you to re-enter, not on our discretion but as a process, which means we have to make this as a process. We have to look at systems which will ensure that our view doesn't come into picture. It's only what we see and what we do. So the simple sentence which goes is trade what you see and see what you trade, which means if I see that thing happening, I trade that thing, and I'll only trade that thing which I see is happening right in front of my eyes, not based on my view, not based on any news, not based on anything else. So fundamental analysis as such does not have a capacity to judge the market risk at all. Okay. Now at the same time, can they coexist? So my simple answer is, say my fundamental knowledge is telling me maybe the sugar sector is undergoing change, or maybe the paper stocks might do well. All I can do is I can focus more on the paper stocks, on my technicals. But if I do not know from a fundamentals perspective what happening, still I can focus on the paper stocks based on the systems that we have. So do we need to have knowledge? Not at all. Technicals are more than enough to be an independent trader, investor in the stock market. Now other thing is, you might have heard about all the returns made by Warren Buffett and all over the years. But there are traders like Larry Williams, there are traders like Ed Sikota who have been consistently giving returns of 38% on huge, not 38%, not on a small amount, but huge corpus year after year for the past almost 2-3 decades. So that's consistency. And those traders, they do it based on technicals, they don't do it based on fundamentals. So that's where we see that it definitely does have power, which can help us to be on the right side of the stock market. Now, there are some assumptions in technical analysis. One is that the market discounts anything. Now, let's just go back to what I spoke about, which was I used to try to trade on the results. Now, I used to see that the results, if you might have seen it regularly, that say a bank or maybe a company like JSW Steel says that the profits have grown 300%. And you see that the price starts crashing. While by reading that, we try to buy and the price crashes. At the same time, you might read that Axis Bank NP has gone up. We try to exit and the price starts going up. Now, why that happens? Because it's all already discounted in the price. And that's why once the news comes out, that's when the price starts going up. For example, the best example would be 23rd of May 2019. The whole world was trying to buy and waiting for BJP to get absolute majority. As soon as the news flashed, they started buying. But if you see what happened on that day, once the majority came, the market started going down for the next 3 hours. And it came down by a good amount because the news was already factored in the rally from March. Once the news came out, the price came down to where it should have. That's how technicals will help us. And the main thing is the last statement, that history tends to repeat itself, which means the patterns which are formed on the charts are formed by human emotions. They'll continue to form for years and centuries together. And that's how this business, which we have seen, did not shut down even for an hour in the pandemic, is something where we should definitely have knowledge about. Now, let us come to the heart of technical analysis, which is what is a chart. So we all know what is a chart, right? Whether we are engineers or doctors, that's something basic we did in our school days. So we have x-axis, y-axis. Now in this case, we'll have x-axis as time, y-axis as the price, and the graph will be plotted. Now the best thing, we don't have to do anything. The software will do it. Second thing, we don't have to buy any software. We just need to use a freely available website, which I'll tell you how to use everything. I'll guide you, don't worry. As I promised you, by the third session, we'll be pro enough to understand what your investments are doing. At the same time, I'll obviously guide you with my view, and if possible, maybe on some forum where I can also share my views. So I'll talk to Ankit about that later on. But as of now, understand what we are talking about. So x-axis time, y-axis price. That's how the chart is made. Now, what are the type of charts? So these are just the type of charts: bar charts, close charts, candlestick. We don't want to get confused for now. Let us only talk about what is a close line chart. We'll keep it very simple. And all my programs, whether it is as basic as Yes I Can Trade or the main program which is happening now, everybody's joined that 7 wonders of trading. Everything is made simple. So anyone, whether it's a college student or a 72-year-old retired one, lawyer, advocate, doctor, housewife, everyone are able to do it easily. So what we'll do is we'll first today focus on the close line charts. Let's see what they are. Now, what is this? This is the x-axis, which is the horizontal, y-axis, which is the vertical, right? So if I have time on the x-axis and price on the y-axis. Now let me show you what is a chart. So say this is, let's say this is maybe a Tata Steel, okay? And this is the closing price on Monday. So the software will plot that when the exchange closes or the market closes. When the exchange closes, market works 24/7. Market is in the mind. Always remember that. So when the exchange closes at 3:30, the software will plot the closing price on Monday. Same on Tuesday, Wednesday, Thursday, and Friday. Okay. So on this, now this is called as a daily chart because you're plotting prices per day. So as of now, we'll only talk about a daily chart. Now you have these prices plotted, and closed line chart will only draw them by a line. So this is the chart. That's it. This is the basic chart. Now one should ask, how would you use to buy a share using this or exit from a stock if it's not doing well? How will this help me? Now, first thing, try to understand that anything in the world, whether it's USD, GBP, crude, gold, nickel, anything in the world, even Bitcoin, anything in the world, cryptocurrency, it can be plotted by the software as this chart, and you can take independent decision whether you should be a buyer in this particular stock, index, commodity, currency, cryptocurrency, anything in the world which is traded on an exchange. So now I'm sure it sounds interesting now. So let us see how we can buy using this chart. Now what I'll do is I'm going to add something to this chart, and that something is, so this was the chart we saw by joining. Now I add something called, which I call as the magical line. Now this is the magical line which again the software will plot. I won't plot it, neither will you plot it. We don't have to do any calculation, we just need to know the application. So now if I'm looking at this and I tell you something very simply, you just buy it when the price closes above the magical line. Can we do that? And can we do that with any amount of busy profession that we have? I'm sure we can, because what I'm telling you is you come home in the evening, you just need to look at, or you watch on your mobile at 3:30, 4 o'clock, whenever your time, and you see that is that particular stock or index or commodity closing above the magical line. And if it is, I have to buy that on the next day. Is it simple? Everyone can do it. I'm sure you can do it, right? If you can do it, just comment with a yes, it is simple. And I'm sure it is simple. Yeah?
Yes, we are getting comments, Prashant. So I was just going to ask you, like a lot of people have this belief that the investment is a long-term thing.
Okay.
Uh, uh, we know that a lot of stocks like HDFC Bank, maybe Bajaj Finance, they can be held over a long term. But a lot of people have Yes Banks, DHFL, Reliance Infra, Reliance Capital in their portfolio, and they're stuck with it. So can we
Okay.
use this magic line to avoid having such stocks in our portfolio? Maybe even just not having those stocks or just selling them at the right time can save a lot of money to for all of us.
Yeah,
Can
yeah,
we
yeah.
use the magic line for that? Yeah.
Yeah, sure, sure, Dr. Ankit. So let me tell you now what happens is 110% you can use this to exit, and it will give you the exit before the price crashes. That's my commitment to you. I'll show you the examples also. Before that, let me just give you a beautiful example. So I had a guy from who did his MBA from IIM Bangalore, engineer and MBA. He joined one of my batches last year in September 19. Now, in that batch, two things happened. One was that he spoke about something he had learned on fundamentals, and he could not do anything for the last 12 years. And based on that, he took one action in Feb, which was he did not trade actively, but he had a huge portfolio, huge. And he stays in Qatar. He was here for some visit, and that's when he joined the program. Now, what he did was in Feb, he exited his entire portfolio. Now, just that one exit saved so much of money in the March crash, and somewhere around August or July end, he started rebuilding it. So that's how even the knowledge of exiting your portfolio will save you lakhs of rupees. You have if you have a big portfolio, either direct equity or in SIPs. Now let me tell you, I'm not going to tell you what this magic line is for now, but definitely I'm going to guide you on the magic line in depth. So if you have gone through the ad or the session that we're going to do, the second session which we'll do next Tuesday is in detailed about advanced concepts on this magical line, right? Before that, we all need to understand what that is. So for that, I have something at the end. Now let's look at this. So this is how the, one second, let me use this. Yeah. So this is how the software looks like on a freely available website. The This is the chart, the blue line, and the golden line is the magical line. So look at this. This is Yes Bank in 2019. Just see what happened. It gave a close below the magical line at around 370 rupees. Okay. After this close, it gave here also, but after this close, it never gave that you buy me back. So Yes Bank told at 360, exit from me. And what happened to it afterwards? One sided, it went down to from 360 rupees to 5 rupees. Now imagine, I personally know people who are holding 1,000, 5,000 shares of Yes Bank with all the fundamental views and stories like Rana Kapoor is the best, he has the vision, he has this, that. I saw this, and whatever I had with me, I exited. Even when I saw some of the mutual. Now, okay, so coming back to for a second about mutual funds, how can you use this? Simplest ways, when you learn it, any mutual fund that we have will have a fact sheet, and in the fact sheet, they declare which stocks they are investing into. You can just check these stocks on the system and see whether the fund is good based on what they are investing, or if it's not good, you move to the next one. That is the simplest way to find a mutual fund. At the same time, now I don't talk more about mutual funds because every investment, according to me, should have a goal. So mutual funds mainly have a goal about something else, maybe your kids' education, some foreign trip, something else. So that should be stuck to that for 5 years. At the same time, even direct investing can have a long-term goal using these strategies slightly tweaked, which I do. I always teach strategy from intraday swing. Swing is what, holding for a week or so. Positional, that is holding for a few months, or investment, which is for months and years together. Now if you look at this, Yes Bank gave an exit here itself and it crashed. So it gave an indication. At the same time, it could have saved a lot of money for the investors. Now this stock, DHFL, hot favorites of all the mutual funds. Every single mutual fund had it. In fact, they themselves had a mutual fund which was investing for others, and people were investing in that fund. Now, if you look at what happened, somewhere around 640 rupees is where the price told me. Now, this is what, go back to the soybean example. Price shows you in advance what's happening, but our view might tell us that, ye 600 todega hi nahi, it won't ever break 600. That is what the rigidity that we have, and we try to buy when it's crashing. So I personally know people who bought at 400, 420 because they knew that from 400 it goes to the previous high 600, I'll get a 50% return. That's how we all do. When I started, I did that. I used to go to Money Control, look at the 52-week low. I used to feel I'm the smartest guy in the world who has seen this today. I used to buy it, and within the next 2 weeks, it used to make a new low, a new low, and a new low. That's where I realized that I'm doing something wrong. That's where I decided I had to learn more. And that's how, from mechanical engineer, I went all the way through investment banking, right up to the next levels, where I saw what's happening with the money invested. And I realized that what I was doing was totally wrong. At the same time, what people are not doing is completely wrong. And going back to the example where we went down all the way 12 floors to pick the 50 rupee note, here, even if they lose 5 lakhs, they are thrilled by that because they feel it's fundamentally good company. So whenever you hear terms like fundamentally good or long-term investments, typically that person would have bought it here and they are talking when it's here. That's my experience of last 18 years. Okay. Now, at the same time, this year we had a pandemic, huge crash in the month of March. But let us see what happened with the magical line. This is Reliance Industries, and this was the crash. Just check, it gave an exit before that, right? In Feb itself, the price told exit from Reliance, something is not normal. And forget about that, that's the exit. Now let's see the entire scenario across the globe, lockdown, people not even able to step out of their house, forget about your work, your business, everything down. At the same time, stock markets were running, and we don't know whether that will come back. No one can assure us that a lockdown would never come back. At any point of time, we need to prepare with something that will stay with us lifelong. Now, look at what the magic line did in April beginning itself. Reliance said, now I told you x axis is the time, y axis is the price. So just check that the price closed about this at 1000 in the month of April. But here, now, if I'm not looking at this and I'm just having my own rigid view, that emotion would be fear that the stock market Nifty would go to zero is the emotion, and now the emotion is Nifty will go to 15,000 and infinity. That's how the world works. That's how the money is made, because smart money knows how to capture this retail emotion and trade against that. That's where the big money lies. Now, that showed that enter into me or buy me at 1000. It gave a small exit here, but it did not crash like Yes Bank. It again gave an entry, and the exit was at 1200. That's 20% in a month, which is good. We Anyone would vouch for that. It's amazing. Next entry again 1400, and the exit was here at 2000. That's 50% almost. So if you look at the move 1000 to 2000, that's double, easily captured on this basic system using what? Just coming home and looking at this in April. Oh, Reliance has closed above the magical line. I need to buy this. I buy it, and looking at it daily, yes, it has not closed, and I need not bother. And I come back fine one day and say, oh, it has closed below, let me exit. Again, it gives me an entry, and then straight from June, it gives me an exit in the month of August. Okay, exit now. Now, someone would say that, oh, I exited at 2000, it went to 2100. That's absolutely okay. We bought at 1000 when the world was in fear, and we are exiting. It will always give you the next entry if it's there. So don't worry about that. If there is no entry, and if it is going to turn to a yes bank, it will give you the exit as well. So now we have seen the power of a magical line. We all need to know. I think we all are curious about what is it, right? So I'm definitely going to share with you what this line is. Okay. Now, what I'm doing is, I told you I'll give you something at the end of the session which will benefit you all. So, Dr. Ankit, we need to ping this link on the forum. So this is program.catalystwealth.co.in/technical analysis. You can go to this website or this link, and all you need to do is just sign up, and on your email ID, you will get an automated email with user ID and the password, and you will be able to access a completely free program from Catalyst Wealth, which will start with what is a share, how to open a chart on a freely available website, how to plot this magical line, also what is this magical line, how we are going to use it, how we are going to enter with this, how we are going to exit with this, what kind of a risk management will we use, how much quantity will we buy. All that is fully pre-recorded. Now all my programs are from 2020 are on a digital platform. It's the same platform which is used by most of the international B schools like Harvard and all for their online programs. So it is the best platform available, and they can be watched from anywhere in the world for as many times as you want, and they are all pre-recorded. So what I want is, I want all of you to go through this program for this whole week, because we'll be meeting on next Tuesday, and you should be well acquainted with what is that magical line. I'm sure all are curious to know. So you need to be well acquainted, and at the same time, you should be ready with your analysis for the next week, that when we come back, you should be able to ask me, I see this is good, I see this is Like once you go through the magical line, I can tell you that Maruti is very near to that. I can also tell you that TCS just picked up from there last week. I can tell you UPL picked up from there. Okay. So you need to find more about that. Just go through this. It might be hardly 35-40 minutes of program. Those 40 minutes will let you know the in-depth strength of what is technical analysis, how it helps you, and how you can go further in this field in addition to what you're already doing and prospering in your own field. You will know how to be wealthy from being rich, when you make money through your business, and how your money can be compounded with the right knowledge. So sign up to this. So Dr. Ankit, I would need your help to post this on the forum, first of all. Secondly, what I want is, I share continuous knowledge on my YouTube channel, which is absolutely free for all. So I'll ask Dr. Ankit to share that YouTube channel link as well. You all can subscribe. Already there are few videos, just go through them, but we will do it all in a sequence in the next 3 weeks. However, there was a video on Equinox which I had posted in September, and a lot of knowledge there. You can go through that. It's going to help you to subscribe to the YouTube channel, go through this program. I can assure you, by the time you come back on next Tuesday, you'll be far more well trained, well versed with the stock market. All of you, everyone, you can share it with whoever you want. Absolutely, it's absolutely free. It's purely from a knowledge sharing perspective. So just go through this, put in that 35 minutes. That's all I'm asking for, so that next time we meet, we all are able to raise the bar and go to the next level. So is that fine, Dr. Ankit?
Yeah,
Any
sure,
question?
Prashant. I'll be sharing the link with everyone. I'm sure everyone
Okay.
will go through your program.
Yeah.
So, Prashant, we have a lot of questions on the group. We'll go through each of the questions.
Yeah,
But
please.
before that, I just wanted to know your views about the current market. Yesterday, we sort of had a mini crash, and everyone is scared whether they should be quitting equities and they should be selling their portfolios. So, can you just
So okay,
give us your view about the current markets?
okay, so let me share something now. The good part about Catalyst Wealth is, and this is not because I am marketing about my company, but this is the kind of effort I've put in for 18 hours. So definitely I can talk good about it. What I have done is, or what we have done as Catalyst Wealth is, we have done programs, design programs, right from very basic to like a closed line chart to candlesticks to um, right to as advanced and latest as market profile and order flow, which very few people know in India currently, and they do not know the right application of that. So, absolutely not to confuse you, but just to give you a view on the market, I can tell you that based on my knowledge of market profile, now it just looks like this. Do not bother about what this is. You need not even worry about that. All I'm telling you is based on my knowledge of this market profile, what I know is that what happened yesterday was something that was bound to happen. I was actually waiting for it. At the same time, what I am expecting is there is a number I am looking for Reliance, which is 2120. Okay, 2120. So in the next 2-3 days, I'm looking at a slightly downward move for sure. After that, I'm looking at another rally till the end of December to this, till Reliance doesn't hit this number 2120, say 2100. I'm not going to be bearish. At the same time, those who know about the indices, you have Bank Nifty and Nifty as the two indices. There is a Sensex, but Sensex is not traded. So it's only Nifty and Bank Nifty which is traded, which can capture the emotions. So there is a level on Bank Nifty which is 32,148, which I'm looking at. Once those levels are hit, obviously we will be meeting next week. I'll guide you with what are the lower targets I'm looking at, which might shock you, but I'm sure they'll come by March. That will do in the second or maybe third session. As of now, a few stocks that I'm looking at: Lotus Labs, Newland Labs, Sequent Scientific. They are looking really good. One more now. Okay, so I just spoke about that I am Bangalore guy, September 2019. One thing was it took action. Second thing was in that batch, based on one of the systems that I teach in Pro Trader program, I gave Adani Green as a stock at 89 rupees. You can go back and check September 2019, 89 rupees. We all exited at 300. The price today is 1200 in 1 year and 2-3 months. That's the power of technical analysis. And I think Dr. Ankit himself was a part of most of my forums where we had stocks like Tanla Solutions and a lot of other huge movers, even the Pharma Move and Lupin. So let's get started with this. So that's my view currently. Next 2 days, you might have some pullback, as they call in technical analysis, some lower moves, but definitely the top is not made. We still have room to go up. Yeah, Dr. Ankit.
I'll just go through the questions that are being asked on the group.
Yeah.
So we have Hetal sir asking, if we look at last year's trend, is there anything like fundamental? With all negatives, market is making daily new highs. So
So
I think that is what we just discussed. Yeah.
that's exactly what we discussed, that the price already discounts everything, right? Now, just to give an example, the world was saying that if Trump loses, the market will crash, right? You might have heard that. What happened was exactly opposite.
Yeah. So we have Dr. Hina who's asking, how could we trace market price?
So market price will be available on the software. Okay, and you go to any website, NSE, Money Control, or any broker terminal that you use, maybe a Motilal Oswal, Zerodha, whatever you use, you'll see that you get price from the exchange itself. Even on nseindia.com, NSE India, that is National Stock Exchange, you'll be able to see the prices. And once you sign up to this program and you go through it, you will see how to use a website called as www.investing.com to see the price and the charts and the patterns, everything in detail.
Yeah. So the next question is again from Dr. Hital. He's asking, do technical indicators follow market or market follows indicators?
Absolutely, the first thing, technical indicators follow market. So I would like to add a statement here which I love. It is, trading is like spirituality. What do you mean by spirituality? Is when you go to a mandir, masjid, church, anywhere, gurudwara, you always bow down and you pray. That's it. You don't stand in front of God and you tell me that tomorrow I want this, day after tomorrow I want this, and next month I want this. You don't do that. You just pray, bow down, and come back. But what we do in a stock market is, I have bought Reliance, I want 2100, I want 2200. Just follow the system. Maybe to start with, follow the magical line. It tells me buy, go down to the line, buy it. It tells me exit, again go down to the line and exit. You will always be rewarded. You'll be blessed by the market. So it's like spirituality. Just go down.
So I think
Yeah.
during our next sessions we'll have Rahul also with us. We should be we'll discuss the emotions that go through in our stock market. So we'll
Yeah,
be doing that in the second or the third session.
definitely.
So
So
moving
yeah.
on to, yeah. So moving on to the next question, Dr. Chintan is saying fundamentals is at discretion of the management of a company, while technical is a maths and numbers and patterns. So it is in that manner independent to be evaluated by the learners and everyone. So it's just a
Absolutely.
comment, yeah.
Absolutely. Why? That's why I said that, most of the times now, the stock that Ankit and we all traded as a team, as a part of our 1 year program, which is Ultimate Trader, what we saw is, we saw that pattern on Tanla Solutions at 88 rupees. We got into it, and 88 rupees in July, August. The price last week was 900 rupees in 3 months, right? Now, did we buy at 88, sell at 900? No. So they are saying there are only two people who know the top and bottom. One is God and one is liar. We are neither. So we entered at some 89, 90. We exited at 260. That was our trade. We were happy with that. Triple in 4 months. Now people might say it went to 900. That's okay. We followed our system. We made what we like. And that's how we will be doing. You need to get a major chunk of the move. But even today, I don't know what Tanla solution does. All I knew is on the system, it is looking very good. It is looking very strong, and I can buy that.
Yeah, I think we had a lot of multi-baggers this year. I think
Yeah,
the
yeah,
last
yeah.
3 4 months, especially pharma and IT, we had a lot of multi-baggers which were
And
picked up
if
on
you
our
go by,
systems here.
yeah, if you go by my view, next year would be the year of small caps, as they say, and we'll talk about it as we go through the next sessions.
Yeah. Moving on, Dr. Vineet is saying what a brilliant session is going on. Thanks, sir, for that.
Thanks a lot.
Yeah. Dr. Hina is again asking exit and rebuilding. Learning, or you can say practice is needed.
Practice is needed. So I think the most skilled job is done by you people, right? I mean, every single nerve ending, it's not easy. I am a mechanical engineer. I know how to build a machine. It's not easy either, right? And in a similar way, you have put in that effort. We have practiced, then we implemented. Similarly, the practice required here is far lesser. It can reward maybe exponentially, but the practice is obviously needed.
So we have Dr. Dipti Mehta madam who is asking us, don't you think you need a finance consultant who can exit and enter at the right time?
My experience, I might sound biased in this. Finance consultant will never exit and enter. Finance consultant, according to me, is needed for your insurance, for your what do you call as those other things, insurance, then your SIPs, all those things. That is fine. That's a different thing altogether. Or your corporate FDs, but this, I don't think any finance advisor can help you.
So the goal of this program is to be financially independent. That is what we are all striving for. So I think if we put in a bit more effort, I think we can easily manage our own portfolios. That is the common message that we want to give through this program. So moving on, I think Chintan Vyas is asking, magical line will be one exponential moving average or SMA. Which one? He's just guessing. So I
So,
think, yeah.
Dr. Chintan, as I said, let us start with something very simple. So, it is the simple moving average, but it will give exponential returns. So, you may call it as exponential in terms of return, simple in terms of usage.
Yeah. I think we are through with the questions. I think we'll end the session over here.
Yeah,
Prashant,
before
do
that,
share
just one
the,
thing.
yeah,
Yeah, just one thing. Now, what
yeah,
happens is when we start, okay, we always have our biases. Like, for example, even when I switched over to the IT part of investment banking, being a mechanical engineer, I was shocked when people used to talk about coding. I used to go and find where's notepad on the computer. From there, growing vertically took 3 4 months, but it took off. Similarly, whatever we start, initially we have our struggles, but once we respect them and we put in effort, even if we fail, we fall forward. So once you fall forward, when you get up, the next level is definitely left behind you, and you move ahead. That's how we will do everything and anything. That's why I've given you this program where you can get started with the basics. Now my experience of past 4 years into training has told me that people with zero knowledge, not even knowing what is a stock, and they include homemakers and people who absolutely can only use computer and internet, they are now trading options, they are trading futures, and they are trading on their own. Dr. Ankit obviously knows it. And at the same time, if we who come from a background and know charts, we come with a lot of analytical ability, because medical and engineering fields demand that as a first basic requirement. You need to have an ability to analyze. So we just need to apply it to these charts and the patterns that we are going to follow, and it's going to be very simple, right? So I think you all found it valuable, and going forward, it's only going to be better. So I'll also share my YouTube channel. You all can subscribe, because very soon we'll be starting a learning series over there. So it's going to be a fun and at the same time good learning for all of us.
So Prashant, do share the link. I'll be sharing the link on the Facebook group. Everyone will be registering and going through the program before we do the next session.
Sure, yeah.
So
Please do that, so that
yeah.
next time we'll talk in advance about the magic line. We'll take it next level.
Yeah. So we meet again next Tuesday. Thanks Prashant. Thanks Rahul for this wonderful session. It's a pleasure to have you here in our forum. Please do guide us in the next programs, and
For sure.
thank you all. Yeah.
Thanks.
Thank you all for watching.
Thank you. Thank you,
Thanks
guys.
all.
Yeah.
Thanks, Dr. Ankit.
Yeah. Yeah. Bye.